Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook on the futures markets. As always, we're going to take a look at our big six markets, and the main goal of this is to create and formulate an attack method for tomorrow so that we have a game plan going into tomorrow's price action. That way we're not too surprised by what the market throws at us. So in terms of the overall momentum that we have today, very interesting day of price action, and we also had the launch of the Snapchat IPO and all that fun stuff. If you haven't checked it out yet, we did a psychology video on Snapchat. That's also linked in the email if that's where you're watching this from, so make sure to click on that link. You'll be able to check that out. Now before we jump into the charts, make sure to swing on over to Slingshot Futures, scroll down, and click on the Join the Daily Outlook newsletter. This will add you to our mailing list so that you will never miss a beat, always be in the loop on what's going on. We'll send you an email with the Outlook newsletter along with different notes, different stocks, different things that we're looking at in the upcoming time. Along with that, at the bottom of the website, we also have all of our different psychology videos. There's the one on the Snapchat IPO, as well as the live trade room morning prep levels. We post these every single morning for trading that day that you can utilize to your advantage. Now, jumping on over to the markets, the Bund, and pretty much everything, as anticipated, like we were talking about yesterday, when you have a big run day like we had yesterday, chances are the day after is going to be a little bit more range-bound, a little bit quieter, just kind of subtle, a little bit slower to move. And that's mainly just because the market's trying to figure out what the heck happened, right? It's kind of finding a balance after that huge movement. And today, that was no exception. We had a lot of kind of back and forth range-bound movement. Now, on the Bund, it did have a decent downward bias, not the strongest thing in the world, but you can definitely tell that the bears own the market for the most part. We are starting to form a little bit of a range down here, and arguably this entire thing could just be a range, but we haven't really solidified the highs, and they missed it there as well. So likely the range is either really small for now, or it's still forming, which either way, we're still looking for the same game plan. We're looking to buy low and sell high. And right now there appears to be a decent chunk of resistance between 164.83 down to 78. So looking for possible selling opportunities around there to begin cycling for that range, and then maybe even some buying pressure depending on how much you can get done in a day around that 164.49 to 42 area. Switching gears over to gold, we have a slightly stronger downward bias. The news that came out a little bit earlier at around 8:30, that definitely kicked things off, but it didn't have as much of an impact as the afternoon session slide back down to the lows. Now overall, relatively grindy downward trend working its way lower, but if you were unable to catch most of that movement, quite a bit of back and forth here until we finally get that news that came out, and that formed a bottom for a decent amount of time. That happened at 8:30, and we really didn't start breaking down until around 11:30. So that news did kind of put a floor on the old markets. That area of interest that the markets seem to respect the most is around 1236.8. So that's the area that we would love to see retested. We find support, find multitudes of support. Now we break out. We're looking for them to come back and act as resistance for a possible turn down. It's obvious that the bears own the market on gold at the moment. We're just looking for a better price to jump in at. Now, in the bigger channel that we have drawn up here, we may be seeing a slight overzealousness from the sellers, right? We didn't hit the highs, and the fact that they were so aggressive that they held it before hitting the highs of the channel and then broke down through the lows, the sellers just might not have any more ammo, right? They're out of ammo, they need to reload, and a lot of times that means that you need a pullback. Whenever that occurs, where you have a breakout of one side of the channel, you usually grind your way towards the other side and break out of about the same distance, sometimes even more. Now, that does also line up with right around that major swing high that was put in around 11 o'clock. So if we can get a grind higher into that area, could be looking for a head fake above it and then a turn back down. In the kind of shorter term, still looking for a selling opportunity around 36.8, but if we see that they break through it with relative conviction, maybe using that as a buying opportunity instead to push the market back up towards the high and, maybe attempt that trap up there. Over on the bonds, well, the bonds, I would say they're range-bound like everything else, but that's just the bonds. They're always range-bound. Fairly back and forth, a nice bear trend to kind of kick the morning off after around 5 or 6 o'clock. But for the most part, we stayed in this range that formed here, and then deviated that range a little bit lower. So that's the first deviation down, and then the second deviation down of that range. And notice one thing that happened here. This range level, the deviation down, measuring this distance and pushing it downward, had a nice level of support. And that showed itself, right? That lined up with monthly support as well. So there are multiple levels of interest in the same location at that 149 even area. When the market tried breaking underneath it, they tried going to that secondary deviation down and they missed it. Now, a lot of times when you have this range cyclical nature where it's bouncing back and forth between deviations and it misses one side, it's usually going to overcorrect back towards the other end. And that means that we have an objective for the buyers to get up to that 149.11 area. So right now what I would like to see is a pullback into support once again at 149 and then a drive up to finish that cycle off and kind of kick things back into range mode once again on that bounce. Over on crude oil for the most part had a nice bear trend, but pretty choppy along the way. Big breakdown, and then we went into a range for a good 2 hours. Big breakdown, went into a range for 30-40 minutes. Another breakdown, corrected it all back, and then we were just stuck in this range for pretty much the entirety of the morning session. So even though zooming out, it looks like a really nice trend, looking intra-candle a little bit, intra-move, it wasn't so great, right? It was pretty choppy if you were trading the morning session in the US. If you were trading the European session, yeah, maybe you had some decent opportunities, but for us here in the US session, we didn't really get a whole lot to work with. Now, this big breakout that we had to the upside seemed to put a top on at 53.12. They retested it several times and just could not break through that area. So that is a major area of interest that we're going to be looking at 53.12. And we do appear to be putting in both a smaller wedge, right? The lows are the same on the small and large wedge, but the top, this is the smaller wedge, and this is the big wedge. So we have kind of both at play. Whenever we get a situation like this, what I would like to see is for the market to break the smaller one, tap the larger one, and then turn down. Now, the major hope is that we don't get stuck between the two, because that usually just ends up being awful price action. So fingers crossed that doesn't happen, but at the meantime, you know, we are seemingly putting in a bottom at around that 52.60 area, maybe a little bit of a head fake down to the bottom of the wedge, and then a bounce back up and start kind of disregarding the smaller wedge and go towards the bigger one. But until then, still have to pay attention to that smaller one in the way. Overall, the sellers still own the market, and every attempt that the buyers have made has been shut down pretty quickly, even after a little bit of a range. So I would like to see the same thing. A nice correction higher into the possible top of the wedge, and then sellers slam it right back down towards the lows again. Over on the Nasdaq, range bound for most of the European session, if not all of it. And once we finally started kicking off at 9:30, big bear drop lower, and then a good 20 minutes of range, bear break, and then really grindy, finalized breakout, and then it got stuck in a range for pretty much the entire lunch session. Again, very clear that today was a little bit choppy, sloppy, but there were some nice breakouts in the middle of it. The overall momentum that we have here, given the range bounds, it seems as though we have traveling ranges, right? We have the range that started here, they tried breaking out of the highs, failed, dropped back down, and if we look at that range, it lines up pretty well with these moves lower. So it's not really much of a surprise to see these levels of support coming in, but whenever you have a range that's deviating that far from the original, it starts sort of disregarding those levels because it's just so far detached that it really doesn't matter anymore. The original range is so far away from where we began that the market doesn't so much care as much. Now, it doesn't mean those levels are null and void. They are still something to keep in mind, but not as much as the more intermediate levels. Now, the intermediate levels, that would be the range high that was put in here at 53.73 3/4, and the lows, which is even stronger, arguably, because we found support and resistance, right? All through here. And that's going to be at 53.65 even. We are kind of seeing the same thing that happened up here. Very well-established range, breakout of the highs, fails. Now we have a very established range, a breakout, it's not looking so good. We may just have a flip-flop, right? Put it in a mirror and look the other way, and potential drive higher. Big exhaustive potential move down, putting in a bottom of a wedge, and now we're seeing the buyers push back against this sell move lower off of monthly support. Well, I have to imagine that buyers are at least going to give this a shot. Now, obviously, the bears still own this market. We have barely even been able to get above the moving average, and as soon as it does, it gets slammed right back lower. So if the buyers do show up, they're going to have to show up with a lot of conviction to prove to the other buyers in the market that they actually want to jump in. Otherwise, nobody's really going to trust it. For now, I would much rather be looking for selling opportunities at around 53.73 3/4, maybe a little bit of a trap above that, and then a drive back down. But if we do get a nice breakout to the upside, potentially that secondary bounce up to get that trap may be a nice buying opportunity. And then finally, switching gears over to the S&P. The S&P, much more stagnant, not really a big surprise. That's the S&P for you. Started off in a range. We didn't really get that break out of the highs like we saw in the Nasdaq, but we are seeing these range deviations hold pretty well on the way down. Not as clean as we saw in the Nasdaq, but again, the S&P can be a little bit choppy at times. I say that kind of tongue-in-cheek. For those of you who have traded the S&P, you know that's a gross understatement. But we do have a bear trend in play at the moment. We broke below major support at 23.83.5. What I would like to see is a pullback into that resistance and then a turn back lower to finish this job off and, you know, maybe put in another test of the lows of the channel. If we can get a correction higher, chances are it might be a little bit bigger than you're going to want to see, bouncing above there, maybe even trapping above that high at 23.88 and then turning down. So there could be some intermediate buying areas as well, but all things considered, the sellers own the market and I am looking to sell. So that's going to do it for the outlook. When it comes to the news, tomorrow's news, there's a little bit of stuff on the docket. Now, tomorrow, bright and early in the morning, 4:30 Eastern Time, out of the UK, we have the services PMI. So if you are a British pound trader, make sure to be a little bit careful around there. For the US session, we have 10 o'clock ISM non-manufacturing PMI. That's forecasted at 56.5. Previous is 56.5 as well. And then you start going into the afternoon session at 1 o'clock tomorrow afternoon with Federal Chairman Yellen speaking. Now, whenever Yellen hits the microphone, it gets kind of nasty, so it might be an early in, early out kind of day tomorrow. We'll have to kind of play it by ear, but just trade safe. And like we always say, make that plan, trade the plan, follow those rules, and you'll be A-okay. Have a good weekend, everyone, and we will see you all on Monday.